All right, guys, welcome back. So let's have a look at the charts for S&P 500. So week is over. We did close at 4090 this week, and weekly performance 1% down. So I want to share a few things with you guys, what's going on and what to look forward, because a lot of people for next week probably expecting CPI 14th of February. That's when it's coming out. And also this morning, there was a revision to December 1, and it was slightly higher than they reported. So keep an eye on that event. But what's going on in the market and what happened, what to look forward from here. So let's take a look at the chart of the SPX. So right here, right now, 4100, that's the resistance I'm watching. 4200 is another level to watch out. And if market pulls back, I mean, if you are bullish right here, right now, basically this trend line, uptrend, is still intact. And I don't care how many people are calling for a bear market after this 1% pullback, but you don't want to like anticipate something. If something cracks, you can take an action, you can react and then trade what you see instead of like anticipating and buying like crazy out of the money options and burn on those when it doesn't happen what you anticipated. So it's much easier to react to something than anticipate. So, and it's also very relaxed, calm feeling when you are not anticipating anything and you don't care what market does. You just basically react to what it does if you're trading, of course, and I'm talking from that perspective. So pullback area would be this 50-day moving average, this yellow line on my chart right here. If it comes down to this level, I mean, it will be still in a uptrend. Even if S&P 500 pulls back all the way to 39.45 next week, it will still be in an uptrend, and that's the zone I would be looking for some sort of a bounce if it does pull back. So far, what's going on in the market? Well, at least my observation this week. So let's take a look at the heat map of year to date. What was going on? I did show you guys this map on a previous video where did the rally come from? It did come from here, basically. All these big names contributed, and defensive names were pretty much pulling back or people were selling them. Well, take a look at this week. Okay, this is just this week's heat map for S&P 500. And you can see all those names that were doing well until today. Well, this week, people took profits. Of course, they're year to date up positive nicely. Semiconductors and all these names. But this is just this week. And what I noticed was this week, you can see people bought the dip in energy. They bought dip in some healthcare names. They bought dip in some defensive names. So that's what happened this week. Okay, is it going to continue? Because you can see, you can take a look at the year-to-date chart, and you can see, I mean, some conservative defensive names are still negative year-to-date, and some healthcare names are still negative year-to-date. So is it going to be another rotation where basically market chop around there? Tech maybe will take a break. If it pulls back a little bit more, we can see S&P 500 basically come down to these 3950 levels, and what's next from there? So basically CPI, a lot of people, let's just close the subject with the CPI. Well, I just follow the US retail gas price chart. So from December, I can basically say that just by looking at used cars, I don't know if used car sales go into that data. In January, I mean, all those things were up. Even energy was up. Gallon of gas average in US was up in January as well compared to December, because I'm looking at 3 months chart right here. So if it comes positive, I mean, people will think that, oh, Fed is going to raise the rates, and it will come right back down to these levels. What is it pricing in going forward? So if you take a look at the SPY, I mean, let's take a look at the SPY options. It's pretty much pricing in that much of a move, 90 points, 100 points move maybe by, so February 14th, you can see 8 points on SPY. So if you take a look at the SPX, probably like 90 points or so, pretty much 80 points. So yeah, it's not too big of a move for S&P 500. We have been having like 2% moves in a day. Like even yesterday when market slowly came down, it was top to bottom 2% move. And if you take a look at the volume, there's no panic. Yes, a lot of people are looking at the VIX. I mean, maybe some people did hedge. They brought up the VIX all the way to 21. It was at that level in the morning, but 2050, that's where we closed. That means going into CPI, maybe some people hedged. So that's why maybe VIX is up this week. So that's another thing. What else I wanted to show you guys here? Momentum. We did talk about the momentum for S&P 500 in the beginning of the week, and maybe even I made a video last weekend saying that 5-day moving average, 20-day moving average, stocks, percent of stocks above their 5-day moving average and percent of stocks above their 20-day moving average, they were below 50%, and that was not a good sign to think that momentum is going to keep going higher. And that's exactly what happened. And right here, right now, you can see the same thing. So maybe all the way till CPI number, if market just trades in that range up and down, I will not be surprised, because momentum sideways to slightly downside right now. So that's something you want to keep in mind. And also, I mean, year-to-date returns, I mean, S&P 500 6.7 still up. And again, these numbers on my screen, dividend adjusted for SPY. NASDAQ 12.5%. I think it was 16 something. So it's pulling back. So maybe we're gonna just see a rotation, and I'm not just gonna call before CPI that the market is gonna come crushing down. So for the next week, that's the range I'm watching. Basically, upside would be 4,200, on a SPY would be 420, and downside would be somewhere around 395, 396. That's the range I'm watching, and I don't think that CPI will move the market that significantly to the upside or downside. So, but people are anticipating IV is pretty high going into that event. So I wouldn't say like crazy high, but it's 80 points. S&P 500 by February 14th is implying 80-point move up or down. So if you're trading options, I mean, it's better to react to that instead of guessing like, oh, it's going to be down. I mean, the CPI is going to go up, so market will tank. You can just wait for it and let the data come out and then react to what you see versus paying premium before the event and basically losing money very quickly. If you are trading, I know a lot of people are trading zero DTE, SPX, S&P, SPY, even SPY didn't have before everyday option expirations. Now they do have everyday expiration dates. So I know a lot of people trading those. So careful with those going into data events like this. So this is the short one. That's what I'm watching. In my opinion, market is still this year, still so far in an uptrend. Nothing has changed. 1% pullback on a weekly. If you just pull up the weekly chart, I mean, it's not too big of a deal after this much of a rally. You can see 5 weeks of rally basically, and 1 week market is down 1%. I mean, it's not a big deal, but we'll see what happens next week. But so far, that's the video. Thanks for watching. See you in the next one. Take care. Peace.